Hey everybody, good afternoon. Welcome to 12-Minute Trading. Today is Monday, the 8th of April. It's Eclipse Day. We're going to be running an abbreviated session today. My name's Doc Severson. I'm joined here with Dave Lukas. And we're going to be talking about the markets. And here we go. Here's another important week. It just seems like week after week after week. Last week we had 21 Fed speakers, or 21 different Fed speeches going on at the same time as the jobs report. Couldn't have got any worse than that, but actually, apart from volatility on Thursday, of course, due to a Fed speaker, market hasn't gone anywhere for a month. Dave, what are you seeing?
Nope. No, that's it. Despite all the chop, the market really hasn't gone anywhere for about a month now. And last week was a down week. Markets were percent. Interesting enough, we have not had a 2% down week on the SPX or the S&P since October. So pretty amazing run that this thing has had. So if we would have kept Thursday's downtrend into Friday, we would have had it, right? But we had that reversal the next day,
right.
And that's just kind of this manic market that we're in. It's just you get every one of those big moves, the next day gets reversed, and that'll happen till it doesn't. And that's just, where we're at, right? So this week, I think, will be particularly important. We've had CPI ticking up, we've had PPI ticking up, inflation ticking up. Now we've got the Fed speakers all out there, and what did it last week is Kashkari came out and said, I maybe don't need any rate cuts this year, and he speaks again.
Yeah, tonight.
After market. See what futures look like tomorrow. Yeah. But they're all kind of waffle on 3 rate cuts. Powell's the only one that is still staying on that.
There's absolutely,
we'll see how things continue to change.
There's absolutely no way
they're going to cut.
And nobody believes him when he says that he's going to cut 3 more times. The only way he's going to cut is if the market starts to crash preemptively. And figures, or there's some kind of exogenous event or something like that, and they figure they have to prop the market up somehow. But right now, as long as we keep blowing out jobs reports like this, as long as the GDP stays over 2 to 3% for every quarter, there's no reason for
no point.
And the thing is, like, people talk about normalizing rates. I mean, we've had, rates have been 6, 8, 10%.
Normalizing rates would be higher than here.
Right, higher than here, except for the debt, which is what you've been pointing out every single week. That's the big X factor.
That's the challenge. The Fed is stuck. The Fed is absolutely stuck. If the wasn't spending the way that it was, and they did the rate hikes, that would have worked. They'd already be ready to cut. The economy probably be in a decent recession and stuff. And we're spending trillions of dollars for having a slight bump in GDP, and that's just what's keeping it afloat. We'll see how long that lasts. But the biggest thing right now, I think the CPI is going to come in above expectations. Oil has been going up steadily for the last couple months, and it's gone up into this month. So that underpins everything from a cost standpoint. So I think the CPI is going to come in higher than expected. I think PPI probably the same. And it's going to be up to the markets now to decide what they want to do. We have a fully charged daily chart that we're ready to release again. I think that'll coincide with what the CPI shows us, and that'll be the next trend. But so far, the trend continues to hold. We come down, we hit that simple moving average, the 20-day moving average in the charts. That is the support level. We just undercut it for the first time last week, and right next day we were above it, and we are holding it as of now. That's about that 5190 level on the SPX. So if we see it close below 5190 and then continue lower from there, you have a change in the trend. See, we just went back above it, and we're just barely holding it. So if we close below there and keep going, then I think that's your corrective move, maybe down to 5,000 or so.
Yeah.
Nice round number.
Something else to look at here is if you, quite honestly, price action is so much more important than any kind of patterns. But if we look at something like this, we've been in this extremely straight trend. I don't remember ever seeing one quite this straight with this few pullbacks, but we have now closed well below there. So any
Yes, we
test of this
have.
from underneath could be a kiss goodbye. So what we could be
Yep.
seeing is over the next couple of days, something like this. And then, just honestly looking at this, I mean, it's, if we did something like, if we drew fibs on this entire move from bottom to top, I mean, look how well the 23.6 retracement comes in at 5,000. So 5,000 would be
Yep.
really a very nice landing spot and a place to reassemble support for the chart and set ourselves up for really the back half of the year. So there's a lot of
We
people
would
that
probably
are,
get there. We would probably get there in a hurry,
oh yeah,
and it would be over like in 2 weeks.
yeah, yeah. And
So,
it's funny, Dave, because it's like this reminds me so much of. This is going to take a while to find here, but this reminds me a lot of what we went through in 2006. If I can find it here, I just have to go through a couple of bear markets before we get to that point. Almost there. Okay, there we go. That is the 2006 early 2007 rally, and that's that shot over the bow that we're kind of looking for. Everybody's looking for that, and that was, I don't believe that was a full 10% correction either. That was maybe only, I mean, I could do the numbers, but it's probably only like 8%, I think. And it was classic double bottom, undercut of the double bottom. And, so this is what Dave and I are talking about. Like, this would be so good for the market if it were to do that, right? Because what we'd see from that move, what we'd see from there is probably very something much like this, which would get us into the back half of the year. And then that was it. That was the top of the bull market right there. Things got ugly. No, let me take that back. It was October. Things got ugly after that point. You could see the character change, though. The character change where everything starts moving around like this. And this is something
it's
that
not
we're
linear
always
anymore.
Yeah, this is the transition into sideways and volatile character. And so this is something we're always looking for to match our strategies. Hey, guys, we're only going to be around for another few minutes here, and then we're going to run outside and check out the eclipse. So if you have any questions,
It's
please.
starting to get dark outside starting to get dark outside by me. Right, I'm in Ohio and right in the path of this thing. So we're supposed to get a full, I think, 3 minutes and 45 seconds of darkness today. So
Oh, that's going to be awesome. Make sure you get some video of that. I'm expecting on Facebook to just be loaded with everybody's videos of this stuff. I saw one from 2017, which was shot down here in Greenville, and it was bizarre because it literally was pitch black outside for a good 3-4 minutes. So
that's what's supposedly headed our way.
Yeah, we've got 80%. So it's going to get a little dusky outside, but not quite like the you guys. It flies right over you guys. So
yeah, we're right in the direct path of this thing. But in all this, the market is doing nothing today. It's like, as an iron condor trader, this is my dream market. Like, just do this for 6 months. It's the greatest market in the world. But for this week, guys, I mean, it all is going to rest on CPI. Everything's back half of the week, right? So we don't really have anything. I mean, like I said, Kashkari, I think, is this evening. Tomorrow, I don't think we have anything but like one data point at like 6 a.m.
Tomorrow's today and tomorrow are like dream days for us because nothing is going on, and then all hell breaks loose on
Wednesday
Wednesday.
through Friday. It's back at it again with CPI, PPI, and then I think 10 Fed speakers or whatever, or 10 Fed speaking engagements. So this is one of those weeks of, just like I said, the daily charts are charged back up, which means that we're ready for the next shorter term trend that lasts, for a couple of weeks or so. This is like one of those weeks to just sit back, relax, let the market reveal its direction, and then just take advantage of it. Whether you sell options like we do, or just even buy into whichever way this thing releases. It's that type of week. It's kind of a chill week, which is kind of nice. So I don't think I'll trade till Friday at this point.
Yeah, no reason to. Just a quick little. One of the things that we do in the trading room every day is we look at what's going on here, and this red box is the opening range of the first 30 minutes. And what it showed us was we had a nice little range. It's well within the upper and lower expected move. What we're always looking for is overstated implied volatility. And the implied volatility this morning, the expected move of today's price movement was actually really well overstated. It was actually relatively high this morning. So I jumped on this thing right around 10 o'clock or so, and I was gone from my positions at target. I think it was 13 minutes. 13 minutes for about a 5% return on that. And you do that, you do that day after day after day after day, and that is what it's all about. I mean, we just turn the wheel. And, today's a perfect day for something like that. Occasionally the price will move, and then we've got some hedging strategies for that. But this is what we do. We cash flow the market every day.
Mm-hmm.
So, well, guys,
these markets, like these choppy markets, are great. Like I said, for like the iron condor trading, that type of stuff, in and out, intraday, like that. We're going to get back to trending again in some way.
Yeah.
And I think a corrective move would be really good, because that would charge up the weekly chart and get the weekly ready to go again, which would kick in that next trend. And it's like perfect timing, right? We're into April, we could sell off some in April into May. And then usually we always see it as in later May, June, July into August, we get that run, right? And then it's just from there, you get that softness, and it makes sense this year. It's ahead of the election. You get that softness in September, early October, and the market will hold its breath. And then afterwards, the election, you'll have certainty, and the market will, no matter what, I think the market goes up into the end of the year, because the market will have certainty and they'll trade off of it. So that's kind of how the year's looking.
Yeah.
So.
Yeah, absolutely. Yeah. Absolutely. So we're ready for whatever comes our way in the next, we'd love to see a pullback, but quite honestly, we've been waiting for a pullback for the last 4 months. So it hasn't come.
Yeah, if
so
it doesn't happen, it doesn't happen.
Just play in that direction. So, well, guys, I'm going to go check out the backyard, and Dave, you should do the same. And all of us should do the same.
My wife and daughter are out there now. Have to go check it out. So just real quick before we jump, any questions from anybody on anything we covered, anything for today? Give you a shot real quick to type that in. If not, we'll let you guys go.
Yeah, or if you're watching this on a replay, which is probably going to be most of you, if you guys have something that hits your brain and you want us to bring it up on the next session that we have, which is probably next Monday, go ahead and fire away. Let us know at support@12minutetrading.com. Until then, nothing's seen, so we're going to sign off from here and go stare through some dark glass. So. From myself here, Doc Severson in Greenville, South Carolina, for Dave out there in Columbus. Guys. So we'll see you guys soon. Thanks very much. Bye now. All right. Go check it out, man.